Welcome back to the deep dive. We're here to cut through the noise and get right to the core insights from the sources you share.
And today, we've got a really interesting one. We're looking at NASDAQ.
Right. And the mission today is really unpacking NASDAQ's identity. For so long you hear NASDAQ, you think stock exchange, right, a ticker symbol.
Exactly. But their latest results, the Q3 2025 numbers that came out in October, they're painting a very different picture.
They really are. They're pushing this idea of being a global technology platform.
So it's not just marketing speak. That's the key. We've got the Q3 data right here, and it backs up this whole transformation story. It's been years in the making.
Okay, so let's frame it up front for you, the listener. There are a couple of huge milestones here that sort of tell the whole story, big nuggets right away.
Yeah, two really stand out. First, their solutions revenue. That's the tech side. It topped $1 billion in a single quarter. First time ever.
$1 billion. That's
Yeah.
massive. And the second one,
Annualized recurring revenue, ARR, the holy grail for tech companies, that hit $3 billion. Another first.
wow. Okay, so solutions over $1 billion, ARR hitting $3 billion, those are serious markers. And the overall picture looks strong too, net revenue.
Yep, $1.3 billion for the quarter. That's up 15% compared to last year. Organically, it's about 11% growth. Still very solid.
And what about the bottom line? Earnings per share.
Good growth there, too. GAAP diluted EPS, that was up 38%. The non-GAAP number, which often gives a clearer view of operations, was up 19%.
So strong double-digit growth, even on that non-GAAP basis, tells you the core business is performing well through this shift.
Absolutely. The transformation isn't just talk, it's actually delivering financial results.
Okay, let's dig into that transformation then. How did they actually do it? I know the CEO, Adina Friedman, specifically talked about this successful transformation into a leading technology platform.
She did, and it really hinges on that solutions segment. That combines capital access platforms and financial technology. That's the engine now.
So that's the segment that hit the $1 billion revenue mark you mentioned, growing 15%.
Right, 15% overall, 10% organic. But look, the really critical part here is how much of that is recurring. We talked about the $3 billion ARR.
Yeah.
Dive into that. The annualized software as a service revenue, SaaS, that grew 12%, and SaaS is now 38% of their total ARR.
Okay, 38%. That's significant. That's the shift away from just transaction fees, right?
Right,
Towards stickier, predictable income.
Exactly. That's the cloud model, the high-margin subscription business really taking hold. That's the tech company DNA showing through.
So let's focus specifically on the fintech part of that solutions segment, because that seems core to this tech platform narrative.
Definitely. Fintech revenue alone was $457 million. And look at the growth, 23% overall.
23%, it's pretty spectacular.
It is. And again, strong organic growth, too, 13%. It's not just acquisitions driving it.
So what's behind that? Just signing up lots of new customers?
That's a big part of it. They reported 65 new clients in fintech just in Q3, plus nearly 100 upsells. But we really have to talk about Verifin. That's their financial crime management platform. The momentum there is, well, it's genuinely impressive.
Verifin, right. That's the one going after the big banks, tackling financial crime.
Precisely. And they're getting traction. In Q3, they added 55 new small and medium-sized banks. Okay, that's good.
Solid baseline.
But the real headline grabber was signing a Tier 1 bank, a major global bank, as a new client, and they included a cross-sell in that deal.
A Tier 1, that's a huge validation. Hard to crack those big institutions.
It really is. And get this. Just in the first 3 quarters of 2025, Verifin signed 6 new enterprise clients. These are the big fish.
6 in 9 months. How does that compare?
Well, in the entirety of 2024, they signed only 3. So they've already tripled their big enterprise wins year over year with a quarter still to go.
Wow. Okay, that's not just momentum. That's serious acceleration. They're clearly taking share from incumbents.
No question. They're winning in the trenches. And it's not just Verifin. The regulatory tech side, also part of fintech, had a really interesting win, too. Very forward-looking.
Oh, who was that?
They signed the CFTC.
Yeah.
The U.S. Commodities Futures Trading Commission.
The regulator itself. For what?
Specifically to help them regulate digital assets, prediction markets, and these 2047 trading environments that are popping up.
So NASDAQ's tech is going to be underpinning the regulation of crypto and DeFi.
That's the idea. It puts them right at the center of managing the future of finance, not just participating in it. Super strategic win.
Okay, so the tech story is clearly firing on all cylinders. But Let's not forget Nasdaq's roots. They're still a massive player in traditional capital markets. How does that side look? Let's talk capital access. Maybe start with the index business.
Right, good point. Because the index franchise is booming, and it shows their reach goes way beyond just the U.S. now. Index revenue hit $206 million, up 13%. But the number that really shows the scale is the assets under management in ETPs linked to their indexes.
ETPs, so ETFs and similar products. How much?
A record $829 billion at the end of the quarter.
Whoa! Nearly $1 trillion tracking their indexes.
It's immense. And money is flowing in. They saw $17 billion in net inflows just in Q3.
$17 billion in 3 months.
Yep. And over the last 12 months, it's a record $91 billion. Investors are actively choosing NASDAQ indexes.
That's huge investor confidence. Are they launching new indexes to meet that demand?
Constantly. They launched 30 new index products in Q3 alone. And significantly, 18 of those were international products. So really pushing that global footprint.
Okay, strong index business. What about the other side of capital access, the listings business, bringing companies public? The IPO market has been tough.
It has been slower globally, but NASDAQ still holds prestige. In the U.S., companies listing on NASDAQ raised $6 billion in proceeds during the quarter.
Okay, respectable in this market. Any highlights?
Yeah, a big one in Europe, actually. NASDAQ Stockholm welcomed the Verisure IPO in October.
Verisure,
Yeah.
the security company.
That's the one. And the sources point out this was the largest European IPO since way back in 2022.
Really?
Oh.
In this environment, landing the biggest European IPO in years, that says a lot about their franchise strength, even overseas.
Absolutely. It shows they can still attract those major marquee listings even when the overall market is challenged. It's a testament to their brand.
Okay, so the traditional businesses, index, and listings are still very strong. That provides a really solid foundation for everything else they're doing. What about the core exchange operations? Market services.
Yeah, the core is definitely humming along. Market services net revenue was $303 million, up a healthy 14%.
And activity levels, busy quarter.
Incredibly busy, especially in derivatives.
That-
Record revenues and volumes in U.S. derivatives for NASDAQ. And get this statistic across the whole industry. 6 of the 10 busiest options trading days in history happened during Q3 2025.
6 of the top 10 ever, just in the last 3 months. Wow. Market's volatile, I guess.
Very active, certainly. And one specific NASDAQ metric really highlights their market dominance, the closing cross.
Ah, yes, the end-of-day auction. What about it?
It set a new record for daily notional value traded in September.
Why is the closing cross so significant for us to understand? What does that record tell you?
It's all about trust and liquidity. The closing cross is where the biggest institutions, the pension funds, the mutual funds, execute huge orders precisely at the closing price. A record volume means those massive players trust NASDAQ more than ever to handle their largest trades efficiently without moving the market. It's a sign of deep market integrity.
Got it. So the foundational marketplace is incredibly healthy, which I suppose gives them the stability to pursue that ambitious strategy we talked about.
Exactly. And they have a clear framework for that strategy in 2025. They call it Integrate, Innovate, Accelerate.
Okay, let's break that down. Integrate, that sounds like it's about the big Adenza acquisition they made, making it all work together efficiently.
That's exactly right. And they're delivering. They actually surpassed their efficiency program target. They've actioned over $150 million in cost reductions integrating Adenza.
$150 million in savings. Nice. Any external validation of that integration success?
Yes, actually, a big one. S&P Global Ratings upgraded their debt. They moved NASDAQ's senior unsecured debt rating up from BBB to BBB plus more.
Okay, a credit rating upgrade. Why is that such a big deal strategically?
Well, think back. Their rating got downgraded when the Adenza deal was announced because of the increased debt load and integration risk. Getting that rating back up to BBB plus is huge. It's the market saying, okay, you've handled the debt, you've integrated successfully, the risk profile has improved. It basically validates the financial side of the whole acquisition, de-risks the company in the eyes of credit investors.
Right, makes sense. Okay, so that's integrate. Next up, innovate. This is the future stuff.
This
right?
is where it gets really exciting. 2 major things under Innovate.
Lay them on us.
First, and potentially the most transformative long-term, NASDAQ has filed with the SEC
The regulator.
to actually facilitate the trading of tokenized securities on its markets.
Tokenized securities, like stocks or bonds represented on a blockchain trading on NASDAQ.
Potentially, yes. This isn't just research. It's a formal regulatory filing. They're trying to build the bridge between traditional regulated markets and the world of distributed ledger technology. A massive step.
Wow. Okay, that's one to watch. What's the second innovation?
AI, artificial intelligence. They officially launched something called the Agentic AI Workforce within Verafin.
Agentic AI workforce. What does that mean?
It means they're moving beyond just giving people AI tools. They launched the Digital Sanctions Analyst FLST. Think of it like deploying specialized AI employees, digital workers, to handle complex, labor-intensive compliance tasks for their clients.
So, automating core compliance functions with AI agents, that sounds pretty advanced. Is it catching on?
Seems like it.
Yeah.
Beyond Verafin, they also mentioned that over 800 clients are already using AI tools embedded within NASDAQ BoardVantage, their board portal software.
800 clients already using AI. Yeah, that's not a pilot program. That's real adoption. Okay,
Exactly.
so integrate, innovate. The last pillar was accelerate. What's that about?
Accelerate is all about the one NASDAQ concept, basically cross-selling. Getting a client who uses one NASDAQ product to buy another, especially leveraging the newly acquired Adenza capabilities.
Making the whole greater than the sum of its parts? How's that going?
Pretty well, it seems. They specifically highlighted 4 cross-sell wins within FinTech in Q3, driven by this one NASDAQ strategy.
Okay.
And since the Adenza deal closed, they've racked up 30 cross-sells in total. They have a specific target here, too.
Oh, yeah.
They want to surpass $100 million in run rate revenue just from these cross-sells by the end of 2027.
$100 million target just from cross-selling. That shows real focus on leveraging the combined platform. It proves the acquisition synergy is real.
Exactly. It's measurable progress.
Okay, so strategy's clear. Execution seems strong. Before we wrap up, how are they using the cash flow generated by all this success, returning it to shareholders?
Yep, balanced approach. They returned $155 million via dividends in the quarter. They also bought back $115 million of their own stock. And importantly, given the focus on the balance sheet after Adenza, they also repurchased $69 million worth of their senior debt. So paying down debt too.
Dividends, buybacks, debt reduction. Seems financially disciplined.
Very much so. It complements the growth story nicely.
So let's zoom out. If you, the listener, take one thing away from this deep dive, what should it be?
I think it's the undeniable reality of the pivot. NASDAQ is succeeding in becoming this hybrid company.
Hybrid how?
It's got the rock-solid foundation of a major global exchange operator,
Yeah.
the integrity, the market structure expertise. But fused onto that now is this high-growth, scalable technology and solutions business.
And those billion-dollar solutions revenue and $3 billion ARR numbers are the proof point.
They're the proof.
Mm.
It creates this really robust financial model. They're not just riding the waves of trading volume anymore. They have this strong base of recurring software revenue from fintech, from compliance tech.
Which makes the whole business more resilient, more predictable.
Exactly. And that's why you see such strong growth, particularly driven by that fintech expansion we talked about.
Okay, so a successful transformation underway. Now, for that final provocative thought, something for you to chew on, let's go back to that innovate pillar.
The tokenized securities filing.
Precisely. Think about this. NASDAQ is actively trying to get SEC approval to trade tokenized assets, potentially living on blockchains right alongside traditional stocks on its regulated market.
It's a huge if, of course. Regulatory hurdles are massive.
Massive if. But if they succeed, if they manage to integrate these fundamentally new types of digital assets onto their trusted regulated infrastructure, how profoundly could that change global capital markets over the next, say, 10 years?
It could completely reshape market structure, liquidity, how assets are issued and traded.
Right. That quiet filing under Innovate might just be the seed of the most fundamental change discussed in this entire earnings report. Definitely something to keep a close eye on.
Absolutely. A space to watch.